So we'll go through a few slides today, talk about our business last year and a little bit about Q1 this year. And of course, we'll talk about all the other things that makes food and beverage a little bit special in terms of retailing in Indonesia. We have over 700 stores. Of course, Starbucks makes up a large majority of that. 75% of our business is Starbucks. But the other part of our business, we call them growth brands. We have 7 other brands, as you'll see at the bottom. They are all starting to contribute more towards the growth of the company. We have over 7,000 employees, both full-time and part-timers. A lot of young people we take on board, first jobs ever. So we like to keep that encouragement of employment. And we branched out into 50 cities. I think MAP is in well over 80, almost 90 cities. So there's still a lot of potential for food and beverage to go further afield. We've been listed now 6-7 years, so we've been quite long with the on the listing, and of course our partner is General Atlantic, who have also been with us since we listed. This is the breakdown of our stores. As you can see, Starbucks is the lion's share, but very quickly in second place is Subway. Subway we've been running for about 18 or 20 months now, and we've had an accelerated growth with Subway. It's something that's done very well. There was a history of Subway being here a long time ago, but the taste for bread in Indonesia is very fashionable now. So many bread offerings that Indonesians are getting a taste for. So it's about the right time to open Subway, and the health and wellness aspect of Subway is also very attractive. So we believe there's a lot more future for Subway as we grow, along with all of our brands. So what's our strategy? We are here for the long term in terms of a food and beverage player, and we want to keep growing and growing profitably. And the way that we have to do that is after COVID, we have to change to the new normal, the way that customers are used to doing business, they're used to enjoying their food and beverage. So a lot of that has gone digital. We are very fortunate that Starbucks has an app, the Starbucks Reward. It was on a card form before, and now it's on a mobile app. We have about 3 million members on that, so that's all very useful data that we can get information and kind of do direct marketing to those customers. But we're also part of Map Club, so all of our other brands can participate in the loyalty program of MAP and tap into the 5 million members of Map Club. So we have to make the most of this facility in how do we approach our marketing. And being accessible is very important in Indonesia with the traffic like it is. Nobody has time to go places. So you either order by online means or we put a store near you. And one of the strategies that Starbucks has employed last year was going out to tertiary cities, to going to these new cities like Garut and Cianjur, Sarang, a lot of places that have now got a Starbucks. And certainly when Starbucks arrives in that town, it's kind of a big deal. We get a lot of attention. But we're very happy that they've started well, and we aim to grow 2 or 3 more in these tertiary cities. So that was an amazing job that Anthony and the team did to branch out into these new cities. So in terms of financial highlights, I think we tell a different story to Nick, but it's very interesting. If you look at 2020, the top right-hand corner, this was COVID, and the second line down, EBITDA. You see, in COVID in 2020, we did not lose cash. One of the things that we managed to do throughout COVID in that EBITDA line was maintain our cash position. So even though we had struggles with revenue, opening shops, we did not lose any cash in those 3 years of COVID. So that's quite an achievement for our team to be able to manage the sales and expenses. It's nice to see at the bottom, if you look at net income, net profit, we did lose money when we add in all the other factors of the business, depreciation and exchange rate differences. It's a loss. We're not happy with that, but it's slowly gotten less. And in 2022, we finally came into the black. And you can see that 146 billion, we were able to deliver 4.3 in terms of the net profit. This is very close to our 2019 number. We're very happy with 2019, one of our best years. So that's kind of the direction we're going. The first quarter of this year, sales growth has been pretty good. We've added quite a few new stores, and our like-for-like sales is good. We have some headwinds when it comes to margin. we are in the business of commodities. We have to buy milk and lettuce and flour, and as you all know very well, those have faced challenges. But as we have scale, we have size, and we have alternative suppliers, we feel very confident we can regain that margin in the next 2 quarters. And in fact, this quarter we're in now, Q2, we've made significant improvements to this margin. So whilst we are showing a negative growth in our net profit, this is actually a very similar trend to 2019. We know the seasonality of food and beverage, how it moves from one quarter to the next. So whilst against 2022, it looks like a large drop, 2022 was also influenced by a lot of Omicron, both lower sales, but we did have a lot of expense benefits at that time when we were saving certain costs. So it's not good really to measure it against 2022. We like to measure against 2019. As we said, that's showing the similar trend as it did in 19. When we look at the balance sheet, we'll see there that the cash and cash equivalent at the top, we are still positive. We are a business that doesn't have any loan. We don't have any debts. We self-fund all of our expansion and our operation. And as we're growing quite rapidly, that is a very tough skill. But I'd like to thank Derwin and Ibu Laurencia and Ibu Suzy, who helped to guide us and how to manage our funds the best we can. But it is good that we don't have any debt that we have to be concerned about. As you look down the balance sheet, I think everything else is a factor of growing in size. As we add more stores, of course, our inventories will get bigger, and our property and equipment will get larger. The only other thing to call out there is accounts payable. We are following the accounts payable according to our suppliers, whether we pay them on 30 days, 60 days. So we feel that we can manage the cash we have and the sales we have to pay on time and stay within our guidelines. In terms of the net sales growth, again, we've done very well in 2022 to come out of the woods. These are sales numbers that have surpassed 2019. Of course, we've added new stores since that time, but we're very happy that we've managed to grow. I would say that everything is not perfect yet in food and beverage. The world has changed. We are into the new normal, and people do still like to be at home and deliver through the aggregators. They still have different habits at nighttime and at weekends and weekdays. So our 2022 and 2023 numbers are not yet back to what we consider normal in 2019. So it's a good resurgence in 2022. 2023, Q1, the sales are there. We've seen a good sales growth, 35%. Again, that's coming from about a plus 13% in like-for-like sales, plus we've added almost 30 new stores. So that's helped us to get to that number. In terms of operating profit, this is where our challenge has been, as I alluded to. But comparing 2019 and 2022, you'll see that we, last year, managed to get back into the game. So our very best year, 2019, where we're very happy with the top and bottom line, we are now back into that state in 2022. 2023, you can only see Q1 here. Q1, when we look at 2019, it has a certain pattern. Q1 is always full of costs, and the revenue yet hasn't built up. So we know that in this period, we're not going to see the optimum profit. That usually comes in Q4 because we've already accepted the increases in costs in Q1. So the costs remain stable, but the growth of new stores and like-for-like sales impact the profit quite noticeably. The EBITDA growth is a fact, again, of when we have new stores, and we've been growing very rapidly, so you'll see that number increase quite highly, and the same things apply to Q1 of 2023 in terms of the profit from the first quarter. Our net income again, we are 2022, very close to where we were in 2019. 2023, you might say, well, that's only 20 billion. If I times that by 4, it's only 80, but do not think like that. That's not how our business is in food and beverage. We know that the first quarter is only 10%, if we look at 2019, of our net income. Second quarter is usually 20%, third quarter is 30% of the total net income, But the fourth quarter is where we do most of our business and make most of our profit, where it's usually 40%. So this number here follows the same trend as 2019. So we're very confident that we have the strategies to move in that direction. Q2 is already looking very good. We're very happy it's going to be very much better than Q1. And Q3 will be a huge year for us. Q3 last year was quite terrible for food and beverage. So we expect very good things out of Q3 this year. And we're confident that we'll deliver the numbers that we promised for the end of 2023. Now, that's a picture of the numbers, but I think behind food and beverage, there's a lot of other things that make it happen. A lot of it is about our people, digital we've talked about, how we do different things to suit the new customer demand. And that's from delivery to drive-through to how people want to receive their products. We have to be creative in new menu offerings, thinking about health and wellness. And we have to kind of go to new cities to make sure convenience is always attended to. Our great marketing team, and one of the marketing is being accessible. So accessibility means that we've gone to all these tertiary cities. And some of them, hopefully you've had a chance to visit. Now the toll roads are very easy to drive through Java. So a lot of these places are very accessible. And we've done a great job to build these beautiful stores. Tico and all of the team and Agnes put a lot of effort into this, and Anthony's been driving this to make sure that we do deliver beautiful stores, probably more beautiful than Jakarta in some ways. More trees anyhow. Dewata is our beautiful store in Bali. This one continues to be in the top 5 of our sales. And we're very happy that it's a standout store. We've added a coffee roasting. Anthony managed to get us into the only country that Starbucks has as a licensee that's allowed to roast its coffee. So we're very fortunate to be given that trust. Great things in Starbucks. I think Liria, who's the head of Starbucks, and Astrid, they've done a lot of wonderful things, again, to be relevant to customers. And one of the things that people want in Starbucks is they want their drink their way, right? I'm sure you all have your favorite special drink, how you want it, but that's something that we have to play up to more and more. Digital, we've already talked about that, and we're leading in that, and there's new innovations around the Starbucks app. So now you don't have to put your money on there to get points. So that's something that we're working at to make sure it's socialized very well. In terms of concept stores, again, we've not stood still. We've tried to do things differently. This is Subway. We are the first Subway to have a drive-through in Southeast Asia. So if you're going to Bandung, KM57, you can stop by a few stores before as a Starbucks, grab the coffee in Starbucks and grab a sandwich in Subway before you head off to Bandung. And then we've got kiosks. We've already gone to doing digital kiosks, so that speeds up the transaction. Of course, halal is almost mandatory now that we have that, so we had to play catch up with Genki Sushi. We've got it in Subway, so that helps us to be a very broad offering for people. And delivery, Subway is about 20% of our delivery, but we think that we can be so much better. So there's a lot of growth potential in Subway. Social media is the best way to communicate very quickly with people. It communicates good and it communicates bad. So we have to be careful that we manage both of those. In terms of Subway, we have a huge following. We are the highest TikTok followers in Subway globally. And I read the other day that TikTok we are the number 2 country in the world for people who use TikTok. So maybe one of you will make a TikTok viral video of this event today, I'm not sure. Subway innovations, we're out there with the truck. Starbucks has got 2 or 3 of these trucks. Subway's got 1, so we're out there trying to be at all the events. I'm not sure if we were in the Argentina game last night, but we've been to all the concerts. I'm sure we'll be there for Coldplay too, get some tickets. And hampers, we're out there doing parties and picnics. So we're doing a lot of creativity. Pizza Marzano is not standing still either. We only have 20 over stores, but we make money in Pizza Marzano. And it's not an easy business. Some of the other pizza players, I think they're listed on the stock market. You can see it's a tough business, pizza world. But our little pizza business here that we have makes a little bit of money. So we're quite happy with that. And we're always doing innovation, great quality ingredients. So we're happy that this is moving forwards. Genki Sushi is another excellent sushi brand we have. We have around 30 over stores. Lots of new players in the sushi world. that you will see if you go to the mall. In 2019, we were the only game in town, us and Sushi Tei, and now there's about 10 other choices. But we still remain relevant, we still remain popular, and I think we've done a lot of new things to grab the crowd. Once in a while, we do this all-you-can-eat that generates a lot of momentum and interest. So we're getting people back in the stores and taking them away from other customers. We are being very creative. As we're a sushi company, we have to deliver excellent quality food. And we're trying to also stick to the Japan relevance. A lot of these sushi players that you see don't come from Japan. Genki actually comes from Japan. So that's something that we need to accent a little bit more and use all those skill sets. We have a lot of things also that how you can have Genki at home. It's not just coming to the restaurant. Paul, our French restaurant, we were sitting on this brand for a very long time. We had 5 stores. And last year we decided to do something about it because there's a lot of other people selling croissant these days. Lots and lots of people. We had the best croissant. By any chance, it's the best croissant. Wouldn't you agree, Ibu Lorencia? Where are you? Our biggest fan.
Yes.
Yes.
So we need to shout about that. We need to be out there because there's a lot of other people selling nice croissant, but ours is absolutely the best. So we've launched a new brand, a sub-brand of Paul called Le Café. It's lower capex, but we sell some of the same products, and we hope to be out there expanding that quite rapidly in the second half of this year. We're also very popular during the holiday times, of course. Godiva, we shouldn't underestimate the power of chocolate. It makes people happy when they're sad, so please go and buy some Godiva. We now sell it in food hall, so if Raoul is here, thank you very much, Food Hall, for being a great partner. We're moving out of bricks and mortar into the supermarkets and other chains. So it's great to see that we can keep this little business very profitable. Cold Stone is our ice cream brand. We are not expanding too many new stores, but we are doing wholesale. So a lot of our business now, about almost 40%, goes to wholesale. So we're seeing a lot of people like the quality of our ice cream and the flavors that we can produce. So we're doing a nice, profitable business with Cold Stone. We've won some awards, mostly Starbucks. They've done an amazing job. You know, they're a leader in many categories. So great congratulations for all the things that all the brands have done in MBA. In terms of development, I just got a few pictures like Mr. Sharma had. I think it's very nice to see the level of quality that we are building stores in different places. Last year, we opened primarily Starbucks and Subway. We are trying to selectively open the other brands, but very carefully. And you'll see that these are some of the ones that we've opened recently. This was our 50th drive-through. Thank you, Anthony. 50th drive-through. And this was in Bali, a beautiful store. Magelang, if you've been to that beautiful city in the center of Java, that's a wonderful store. That's a tribute to all the people there. Pak Utomo, our supply chain manager, that's his adopted store. So hopefully you're going to look after the sales there, Pat. Madiun is another beautiful city. Not everybody's been there. This is an amazing store. Well done. Garut. Again, we do things with existing houses. So we kind of keep the culture. We make it very beautiful. And it's a lovely store with an outdoor area. But we're not only doing Starbucks. Bintaro, if you live in Bintaro, if you've been there, please stop by our store. Starbucks is in the bottom. We have a nice restaurant now on top. So please visit that. It's a beautiful renovation. Every time we renovate, we have to deliver 20% sales increase to generate that. Is it 20 or 30%? So that we can make this a good investment. Same for Kota Casablanca. We just renovated this store so that we remain very relevant to the customers. Genki Sushi, we are in Bali now. It took a while to get to Bali. We have a beautiful store. It's in the top 3 of our sales. So a lot of good trade happening in Beach Walk in Bali. And we're also opening Kuningan City. If you go there for a visa to UK, you can stop by and get some sushi. Mall Kelapa Gading, we finally ventured to the north. Ibu Susie's watching us very carefully in Mall Kelapa Gading. And we want to make sure we deliver an excellent experience there. Again, there's a lot of choice. We have to prove ourselves. And this is the smaller size store that I mentioned from Paul, the Le Café. So in BSD, we've opened one there in the breeze. Beautiful location. Nice to go there in the weekend with the family. And we've opened a very small size too. This is probably that's 100 square meters. It's a very small store next to Starbucks, next to Subway. We don't have to walk very far to see all of our brands. But this is doing exceptionally well in an office-based location. So we've got all different asset types to capture the market. Just a couple more slides. We're in the airport. Hopefully you'll take Garuda to fly somewhere. You'll see that we're in every of the important gates. Paul is at, I think, gate 13, and then Subway is at 12, and Starbucks is at 16 and 25. So we have a very strong presence in the airport. And Godiva, yeah, we've started to branch out with Godiva. Coldstone, so it was a bit too many. You know, ESG is very important, and I think customers now demand that we do a better job in sustainability. So Starbucks is leading the way without a doubt. Mr. Sharma mentioned this about how we are approaching to have recycled items so that we're a leader in the industry. But we need to be active in the community. And I think we've spent a lot of time, again, you know, Starbucks is a leader at this. And Avelina and her team, Reina, they're out there working with the ops team. Surya and Ding Ding, I have to call you out here. You've been very active with Anthony to make this all come to life. Coffee, Mr. Sharma mentioned about how we're kind of reducing the carbon footprint by roasting the coffee that's grown in Indonesia. That's a great story from seed to cup. Employment, yes, we like to give young people a new chance. So probably 95% of our people in the store never had a job before. So we're very happy to take them on board and give them the training. Work with Naomi, where are you? Doing a great job helping us in the Retail Academy. Equality, you know, it's a sensitive subject these days, gender. So we won't quote the numbers there, but we are very balanced in how we approach that. And education is something that is our foundation. Mr. Sharma mentioned in Tanah Abang. Please go and visit this store in Tanah Abang. It's not a dangerous area, Tanah Abang. This is very nice. You can go there. This is a beautiful store. You'll be very surprised. It's an oasis in the middle of a lot of other things. The Farmer Support Center, Mr. Sharma mentioned. It's a beautiful place in Brastagi, and we do a lot of work with Starbucks to help the coffee farmers. Well, there's quite a lot of pictures. Thank you very much for listening. Hopefully we'll...